You're listening to the Multifamily Journey Podcast. In this show, you'll hear industry experts share tips of success and failure from their real estate investing journeys. You'll get a transparent look behind the curtain while you learn to fulfill the lifestyle you want to live and achieve your wealth goals. Get ready for the journey to financial freedom through investing in multifamily real estate. Here's your host, Blake Dailey.
Hey everyone, welcome back to the Multifamily Journey Podcast. I'm glad to be back today and in good health because Miss Rona paid me a visit. So my schedule's been a little bit messed up. I think it's funny because I was saying I wouldn't get it, and coincidentally, I tested negative, but my wife tested positive. So of course, I called her right after getting my test and bragged about how I had the superior immune system and all this and that. And she really did not like that because she was feeling a little bit worse than me. But really, all in all, we were completely fine, had pretty mild symptoms. So it's all in good fun. I know everybody experiences it a little bit differently. So lucky that we got the light version and cracked a can of Corona Light. Today is going to be a little bit different show because it's just me today. I wanted to take the time to share where I am at on my journey. I know I haven't talked about that a whole lot yet. And it's good timing because I just got my first commercial deal under contract. I'm actually partnering with another team to knock this deal out, and super excited to get the ball rolling on, my own multifamily journey. But I also did not want to be the person that only shares successes. And I've been guilty myself of, having that envy or disbelief or even self-doubt when I see other people posting about the multifamily deals that they've done, wishing that was me, or just being frustrated that I'm not having the progress. And I've always tried to remind myself that they probably struggled to get there too. And they're just celebrating their win deservedly. And I think in the trenches is where the most important work is done, right? And just getting to that point. So we'll talk about that today, right? And share, the whole step along the journey to get to this point and not just talk about the deal yet. And it still has to close too. So we'll talk about all that. But before we get into it, I wanted to remind you all that if you haven't already, please go leave a rating and review on iTunes. Doing that's a big help. And if you, for those of you that have so far, you're awesome. I said I would give a shout out to whoever screenshotted their 5-star review and sent it to me. So thank you, Trevor Oldham. You are the man. Also, trying to be more active on Instagram. So if you want, you can follow me there at Blake J. Dailey. Super simple, just my name. And with that, let's get to the show. Maybe the best guest of all time. No, I'm just kidding. It's just me. But we will get into a good topic today, a couple of different topics. So yeah, let's get into it. Okay, today I'm doing a solo show, so there's a lot to break down when you're talking about the multifamily journey and the multifamily real estate journey. And what's more is everyone's journey is different. So today I wanted to shed light on where I'm at in my journey, what I've done to get to this point. And I think there's a lot of good takeaways because I made some good moves, but also made some mistakes, which you'll see, and we'll break those down. And we'll even talk about a recent deal that I went through, and we'll break that down, and you'll get to see my side of why ultimately I didn't go through with it and my decision-making process there. And maybe you'll think I'm smart, maybe you'll think I'm an idiot. I don't know, but I'll lay out the information there for you and you can make that decision. And also how I got under contract on a 66 unit in North Carolina. Technically, my partner's got it under contract, and that's just another step along the journey, and different routes you can take to make deals happen. So we'll get into all that as well. So my big goal with this podcast is really to give transparent advice to people looking to get into multifamily. And there's a lot of people who have arrived or make it appear that they have, and talk a lot about all about their successes and their triumphs. And in today's Instagram and social media world, it seems like that's all we see is other people doing really cool stuff. And I think it's when we benchmark ourselves to others, we're always comparing our success to somebody else's, right? And I think we need to get away from that, because what you don't see is all the struggle those people went through. And I don't just want to be another sheep buying in the herd. So I asked myself, where could I give people the most value? What could I do that's a little bit different and isn't just the same thing of everything else that's all over social media and all over the internet? And I wrestled with that for a long time. And ultimately, I came to the area in between deals, where the real money is made. So, right. I mean, you hear that money is made when you buy, but all the things you have to do to get to that point, nobody ever talks about those are very light. Right. So we always see where people end up, but just not how they get there. So that's what I wanted to share my journey as I'm on it, to share the tips I learned along the way and to show the progress as it's happening. So it's more real time and just plain more real. So that's what this podcast is really all about, sharing my journey and that of my other guests. And so that it helps you along your journey, so that you see the things I'm doing and that the guests are doing and all that. And it really just spreads to you. So let's just get started with where I got started. So I think I've talked on here a little bit about how I got into multifamily or what led me to multifamily. But originally I started out with, first of all, a VA loan once I got here in Panama City, and then quickly transitioned into fixing up hurricane damaged homes, because there was a lot of them after Hurricane Michael in this area. There's a lot of opportunity. So I thought to go fix these homes and get really good deals. And that's exactly what I did, but found out pretty quickly that repairing hurricane damaged homes is a lot of work. There's a lot of unknowns. There's mold, there's foundational issues. There's all kinds of different things. So those rehab budgets end up creeping up, this and that. And then as I held on to the properties, I realized that I had a lot of different tenants all over, or I do Airbnbs too. So I had tenants and guests and different properties. And if, one AC broke down, it was a different brand. So it took different parts, and just really a lot of inefficiencies in my residential portfolio, and have 11 rented units right now and another property that I'm selling. So that's what my portfolio is looking like today. So I had one deal in particular that really led me into multifamily. And that was a 2-unit that was a burr and B. So I burred it and rented it out on Airbnb after it was done. And the reason that is the one that pushed me into multifamily, because, well, one, it was already 2 units. But I went through the whole rehab process. I raised private money for that deal, ended up refinancing to a commercial loan. And I basically did everything I would need to do a multifamily deal, but on a smaller scale. So this is like a $250,000 property now, but I could have done the exact same thing on a 10X $2.5 million property and just gotten much bigger results. So I asked myself, how could I get to that point faster to make my life easier, have all my tenants, have all my maintenance, everything under one roof? So that deal is what made me get into multifamily. And that was about March timeframe of this year, 2020. So, and that, as you know, was also when COVID kicked off. So I kind of thought of COVID like, yeah, it was bad and it was kind of frustrating when we were on lockdown and quarantine. But I used that time to think of, all right, where do I want my business to go? What do I want to see change? Like what can I implement now with this extra time to research and think and really kind of lay out where I want to go? And that's when I use that time to start to plan out and educate myself on multifamily. So read Rod Cleef's book, read Joe Fairless's book, read Michael Blanc's book, did some online meetups and stuff like that, and really got into it. By the April timeframe, I was, even earlier than this, analyzing deals. But by about April, was putting offers in on deals and going after brokers, making the conversations, doing everything that they preached in those books. But doing that as a one-man show, 23 at the time, it's hard to, get people to take you seriously, one, and then two, just get the traction starting out by yourself, because it's very time intensive. There's a lot of work. So put in a couple offers and things like that. But to back up, like how I even found the places that I wanted to be was I did a big market analysis of the Southeast, because I knew after the education, the reading, like the 3 things that drive multifamily are population, jobs, and wages. So population growth, wage growth, job growth. That's like the golden triangle of what you want to see demographically for a multifamily market. So I was looking at a couple of different places. My market here in Panama City was good for some of those things. But for whatever reason, I mean, the supply was low really. So I didn't look here as much. So a market I focused on early was Huntsville, Alabama. And the reason I chose there, because there's a good supply of federal jobs, Army, Redstone, there's NASA there, healthcare. They had a lot of good things I wanted to see. Industry diversification. So no one company or job or anything like that controlled a mass amount of the jobs. The Army is the biggest employer in that area, but I don't think the Army base there is going to close anytime soon. It's a big driving factor, and that base is growing as well. So I don't think the government would shut down a base they're investing in right now. So that was a good indication for me. So really liked Huntsville. So on my market analysis, that was one of my top ones. And I figured that I would just focus in that market and in my local market. So I picked a market that I knew really well, that was in my backyard and that I could get to know more intimately. And then a market outside of my area that had some varying aspects of it that experienced some different market forces and that I could get really familiar with by just focusing on that. So that's what I did. Focused on Huntsville, started putting in offers and multifamily. It's LOIs, letters of intent. So basically you send this LOI before you ever send a contract. So yeah, started sending LOIs and got some traction. But again, I was a one-man shop. So I was the one finding deals, talking to brokers, underwriting deals, finding financing, trying to find investors, just doing all the marketing, setting everything up myself. And it just got to be very time consuming and very, very tiring. So in my mastermind, that's another thing I would recommend is getting in a mastermind, because I was taking all this back and forth to my mastermind, talking about ways to get different results, get better, tweak what I'm doing and see improvement. And that happened. But one of the guys in my mastermind, Brad Penley, who was also on this podcast earlier on, I think it was show 2. But Brad Penley was in that mastermind group, and he was with Growthview Properties, who I'm with now. So you can probably see the line there of how it happened. I knew Brad already, but met him and talking with him in the mastermind, and then he was with Growthview. So that connection really happened organically just because he saw what I was doing. So that's one big perk of mastermind is you find somebody to do deals with, you find somebody to bounce ideas off of. And that was never my intention to get into Growthview from the get-go. But once I had the opportunity, I was like, heck yeah, these guys are all awesome. Their values are aligned, like hunting 100-unit apartment complexes, like everything about it, just loved it. So it really worked out. But if you don't get active in the mastermind, if you are out networking and talking to these people, then that opportunity never arises. So I would definitely recommend finding a good mastermind and finding those people that you can talk to, confide in, and do business with. Like my War Room mastermind, I've heard the story, countless times now, of people doing deals together out of that group. So been in that in all of 2020, and the amount of deals that have come out of that group has been crazy now. So it's really good stuff. So that was my early progress, kind of where I went from, just getting started into real estate, residential to small multifamily, and then transitioning to focusing on commercial multifamily, even though I was doing residential deals throughout that time. And really I still will, as long as the deal is good. I'm not really marketing for single family deals and small multifamily deals like I was before, because I want my time focused on the bigger stuff, because that's my goal. But as they come, I'll do them. So talked about how I got started and that early progress, how I got linked up with Growthview. So how did all that lead to where I am now? So one thing I wanted to talk about is, because this is fresh. So this is really good to talk about it now and get the the learning lessons from it. I just had a Huntsville deal I was in negotiations with. It was 58 units, value add, close to Redstone Arsenal. So C-class area, it's screened pretty poorly, but I've seen multifamily properties in the area get rehabbed and they rent a lot higher. So there's a lot of demand in that area. And over the last 5 years specifically, it's pulled around a lot, like talking to the people that invest there that I've networked with just by getting in that market. They've seen that area come up a lot in the last 5 years. And then there's a lot of things set for, the near future. The stuff you find at by like Googling Huntsville or looking up the permits, stuff like that, seeing the progress immediately in that market, right? Whenever big developers or something like that announce a new project, like I have Google alerts set for Huntsville. So I see when that stuff comes out. So really familiar with the market. And that is something I would recommend if you're looking outside your area and you want to really get familiar with the market. Set your Google alerts to give you to email. I think I have mine set up to once a week. It sends me an email about Huntsville and just kind of recaps all the articles. So I learn about the developments, any big happenings or events in Huntsville. Just a lot of good things come from that. So this deal, it's not in a great area, but I think it's coming up. It's going to appreciate. Rents will go up over time. And as you know, from getting into multifamily, the income is what drives the value. So if you can push those rents up and you use the cap rate to then determine your value, because the value is just the NOI over the cap rate, then you get your value. So you push the rents up, value goes up. So that is a proven play here. So as I was underwriting this deal, it was an asking price of $2.4 million. Originally, my numbers came out to where, the return I wanted to see, I wanted to offer 2.25. So I put in my LOI. I was quick on it. This was the day before Thanksgiving. So I figured, hey, I just got this deal yesterday. You know what? I'm going to be the first one to underwrite it, do the market analysis, look at the rent comps, all that stuff, and spend a good amount of time doing it so I'd get it in soon, right? Because I wanted my LOI to be the first one they saw. So got that in, and it was at 2.25 million. So like 150,000 lower than the asking price. Fast forward to after Thanksgiving, because, just got the email back from the broker, thank you for sending this in. It's Thanksgiving, so nothing really happened that day. Flash forward to Friday, it's like, hey, we, because the holiday, no decision was made. Now we have 2 other offers. So there's 3 offers. This was a pocket listing scenario that it wasn't listed, but they sent this deal to a few people they knew who had fit their criteria. So now that there's 3 offers on it, the other 2 are asking price. I'm like, all right, let me evaluate my numbers, run things again, put the asking price in as the purchase price and see if that works. It's a little bit slimmer, but it still worked. I was like, get this deal. Let's do it. Submitted the LOI in again. And something about this LOI too is a friend from my mastermind, actually, back to the mastermind, showed me Canva. So Canva is a free online software that you can go in, create really nice templates. You can use it for social media posting. You can use it for like presentations. Basically anything that's like graphic design, you can use Canva for. So I made my LOI in Canva and made it stick out, made it really nice, wrote a blurb about me, put a picture of me and my wife on there, like made this LOI really personable. It just try to make it stick out from the crowd, right? So if there's 3 different offers at asking price, usually the seller is what you would assume would go with the strongest offer or the one that stuck out to them. So that's what I was trying to do. So put in that LOI again, but instead of doing that or asking for a best and final, this seller countered all 3 offers. So this is something I had not seen before. Instead of asking for a best and final, is just counter all 3. And what's funny is the price went up. So this price went up, and I evaluated it. I was like, man, this is getting really slim. Like, I already didn't want to do it at purchase price necessarily, because usually when you buy a multifamily property, you want to buy on the actuals. So you look at the actual income as is, the actual expenses as is, and that, current NOI, and divide it by the market cap rate. For this deal, the current NOI was really low. So if I bought this, basically it was trading on like a 3% cap rate. But I knew that wasn't quite reflective of this property. Like, it's definitely not a 3 cap operation, right? Like, it's a slightly distressed property with rents under and some deferred maintenance because the sellers owned it for 20 years. So basically what they're doing is selling it based on the value that could be added. So I normally don't like doing that, but Huntsville's a hot market. This is a pretty good looking deal. And I thought that I could go in and fairly easily turn this place around to make it to where that increased purchase price made sense. So my offer was based on improving the value, not what it actually was, which I normally wouldn't recommend. But depending on your market and how comfortable you are with executing your business plan, that might be something you can do. So that's what I did. Basically cooked in my whole first year value add on that offer price. And then when the seller countered and pushed the price up, that just didn't really work for me. It made my returns to where they weren't really as good. And I'm a kind of person, if somebody's going to invest with me, it's going to be a deal that I would invest my money in. And if you know anything about me or my investments, you can read about them on multifamilyjourney.com. I put all my deals up there and talk about them and all that. The numbers are all like to get the actual numbers. So I'm pretty strict and conservative. Like, I underwrite conservatively and make sure it's going to work, and always kind of pad in, a percentage if something happens. And I like to see good returns. Like, I don't have any money left in the properties that I refinanced. Like, they've all been burred out. And that's what I liked about this deal, is basically a big burr, buy, rehab, rent, refinance, repeat. So it's a big apartment burr deal, which I thought was pretty cool. But as the price went up, those returns started to change. I was like, started to get a little bit less conservative, tweak some things, and, got to my price. I was like, all right, I can't go up anymore. And then the seller said, oh, that's the price I wanted to net. So now the price has got to go up again. I was like, I cannot raise the price on this again. I ran the numbers, like, let's try it. And at the time I was like, you know what? I think Huntsville, in 5 years, it might not even make a difference. But what I noticed as I was underwriting this deal, like, year one reserves went out, added a little bit more to the income, thinking, maybe I could get some more units rehabbed in year one, so that by year two, it's already up and running more, meaning the income will be higher, meaning higher NOI, higher value. And really what I wanted to see at that point was higher cash flow and returns for the investor, and then refinance in year three to get most of that capital back to investors, and then, hold the next few years for cash flow and sell for an equity kicker on the back end. But as this price went up, it started to look a lot less juicy for the investors. I was like, I just can't pull in investors to this if it's not a good deal, right? If it doesn't have the meat on the bone. So ultimately, I think at the end of it, I was about $100,000 off of what the broker asked. And then in there, I caught a little between the lines and found out there was 6 less 3-bedroom units than I thought, which means there was 6 more 2-bedrooms, which the income was lower. So that of the 2-bedrooms, so that dropped the overall income just a little bit too. So it's kind of like a double hit there. But for whatever reason, because of those reasons, the numbers just did not work the same. And I had to phone a friend, Jake Volan. He talked some sense into me, and he said, dude, don't let the thought of what that deal looked like before coax you into doing the deal now because like the deal has changed. I was like, yeah, that's a good point. But here's the part that caught me up is that I'm thinking in my head, Huntsville's an appreciating market. If they select Space Force, if they select Huntsville as the new headquarters for Space Force, so that could be a complete game changer. Like the rents, you could see a big rent bump, and then that 7-8% that the price went up at purchase wouldn't even make a difference. But I really just thought to myself that I didn't want to be a person to do a deal just to say I did the deal. I didn't want to make it completely like a 90-10 split where I'm barely in this thing and have to hand out everything just to do the deal, because I wanted it to be a good deal for everybody. And it got away from that. So ultimately that's why I didn't go with it. I don't know, maybe you think I was wrong. Maybe I should have done it. Maybe I'm not, but that's the internal struggle I dealt with. And that's the thing you don't see, like those tough decisions are never really talked about. So I wanted to give a little behind the scenes of that process there, what my thinking process was, having to phone a friend and like talk some sense into me. Talk to another buddy, Andrew Durazio. He talked some sense into me as well. This was a decision that weighed heavy on me, and I don't know, maybe we'll see how that property is doing in a year or two and decide if it was a good deal then.
There is no better asset class for building wealth than real estate. And in most instances, people don't have the time or energy to invest in it on their own. So how do you build wealth with real estate when you lack the time and energy? Leave that to the Growth View Properties. The Growth View team finds, negotiates, and manages multifamily assets for private investors. Their mission is to help investors secure the ultimate asset, which is time, all the while impacting the greater good with their endowment fund that fuels the mission of charitable organizations. Find out more by going to thegrowthview.com. That's view with a VUE.com. Put your money to work so you don't have to at thegrowthview.com.
All right, now we're talking about the actual deal I have under contract. I was working both of these at the same time. One of them worked out. Actually, it was technically already under contract, but I kind of went into contract once we partnered up on it. So partnering with a team, Real Growth Capital, who that's Michael and Scott, who Jake Volin, who I mentioned before, brought me in, him and Charlie Wessel. So those guys went to the academy with Jake, and me and him know each other very well. We're actually in the same squad. So at the academy. So me and him are always talking multifamily. He's got this partner, Charlie, who knows Michael and Scott with Real Growth Capital. And they got this 66 unit value add deal in Greensboro, North Carolina. And Greensboro is another market I love. North Carolina as a whole, really, like you see that golden triangle, the job growth, population growth, and wage growth. So this looks like a really good deal, and I'm pretty pumped to get this one going. It is very investor friendly. So I'm really excited to get moving on that one. Yeah. So that's exciting. The progress, I feel like it took me 8 months of getting this contract all of a sudden. It's that persistence pays kind of mentality, right? Persistence is key. So it always seems like it comes all at once, but what you sometimes might miss is the 8 months of work and before it, networking, talking to different people. And that's exactly how this deal came about, was networking and knowing other people. So that's that. So went from losing a deal over $100,000 to getting a deal like the very next day. So that's cool stuff. So now I want to talk about what's next. So for me, I think the first thing on my plate is to fully capitalize this deal. So that's what I'm working on right now and getting this thing to the finish line. But it looks so good. I'm pretty confident in this deal and in our team. So yeah, looking forward to doing that. And then I think the next thing would to be get a commercial deal that I operate myself. When I originally set my goal for 2020 to get a commercial deal under contract, that's kind of what I was thinking in my head. But as I realized and became more aware of the opportunities in multifamily, I became a lot less egotistical and prideful, I guess, to it have to be all me, right? I thought like I had to do it. And that's what Brad helped me figure out with GrowthView was like, hey man, you are much better off with a team. Like everybody plays their role, right? It's just like when I played football, like everybody has their position, right? You have receivers that run down the field and catch balls. You got the quarterback that throws it. You got the lineman that block. Like everybody plays their role. So that's why a team is awesome. That's why I was super excited to get in on this North Carolina deal, is because it gets the ball rolling. It shows progress. It shows track record. It shows competency. When later on I can say, oh, I've got 66 units in North Carolina. I've done a commercial deal. Like I've seen how the deal operates and runs. I've raised capital. I've done all that because I had access to this deal. And that's why a team is important. Like I think it's really key to understand that you don't have to do everything yourself. You can find the right people, and that's why everybody has a different journey. Like some people in the multifamily space only raise capital. Some people only asset manage. Some people only find deals. Some people only cold call. There's roles for everybody, and you don't have to be every role in your firm or in your company, or, if it's just you don't have to be every role. You can go provide value to somebody else's partnership, like what I'm doing right now, to build your track record, because later down the road, that's going to help you. So I think that's the most important part of this deal for me, is that it builds a little bit of track record and gets me going. Even though I'm competent enough to go do a deal by myself for whatever reason over $100,000, that deal hasn't happened yet, like that Huntsville deal. So this one's happening. I'm super excited about it. And also, going forward, I'll still do residential deals, but like I was saying before, the numbers have to be right. I'm not gonna do a slim residential deal, that's for sure. There's gonna have to be meat on the bone, but I've got the systems in place now, and the contractors, the lenders, really everything I need here in Panama City to keep doing those kind of deals. So I still got my ear to the ground, listening for who's doing deals, listening for where I can bring value, where I can help a seller with this latest off market deal. Say top and bottom what appeared to be a duplex with a lot of land next to it. And I was going to do the rehab on the house, my partner and I, but we got an offer on the house and the land before we did anything to them. So really we get to decrease our risk and still make a profit, really eliminate our risk because we're not doing any rehab. So I'll still do deals like that, but definitely the focus is multifamily going forward, and really just looking to find ways to provide value to others. Like I've made some silly mistakes myself with doing multifamily so far, like something as silly as just typing up just a rough Word document as my LOI and sending it in, looking super unprofessional, no signature on it, just sending it in. So I've been through stuff like that, but I also got this deal. So, I'm seeing how it all comes together now. So I've got on, multifamilyjourney.com, I've got the links to my calendar. So super open to taking the calls. I put it out there because I want people to set up those calls and ask questions. So if you do have those questions, feel free to reach out to me. And then I also put out weekly blogs and write for other people's blogs now as well. Started writing for David Parade, the military millionaire. I'm wearing his shirt today. So you can catch my blogs on multifamilyjourney.com. Also post them on LinkedIn or on David's, the ones I've written for him. I'm also starting to experiment with video content a little bit too. I think writing is sometimes therapeutic, and I feel like I'm a pretty decent writer when I want to be, but it's always like sitting down to do it and typing out those articles. And I think going forward, video content is the way to go, just with how people's attention spans are getting. So trying to find a way to do that and add value and not be spammy, because I don't want to be doing TikTok dances or anything like that, because I got no rhythm. But yeah, and then, just looking for ways to get in front of others, keep building, and then helping others along the way, because all part of getting into the multifamily game and raising money with syndication and all that, like it's all a journey. There's different aspects to every piece. So I'm just trying to show that to people as they go along, and hopefully it helps. And, I make myself available. So if any questions pop up. So that's where I'm at on my journey. I thought it'd be cool today to just sit down and briefly talk about all that, kind of where I've been, where I'm at now, and what I'm looking forward to doing here soon. So I think chief among the lessons today is that multifamily is a marathon and not a sprint. Maybe it's a sprint when you get it under contract and you got to raise a bunch of money before the deadline or whatever. But in essence, it is a marathon. It is a grind, hit the rock kind of day. Just keep swinging your sledgehammer, and that rock will split eventually. But it's going to feel a lot of times like you're just hitting a rock with a hammer. I can tell you that. And if anything, like get an accountability partner and track your progress together so that you're more likely to stick to it and see actual progress. I've been guilty of falling off the wagon too. And I just think the key is continuing to push forward with accountability partners or masterminds. You can do that more easily. And then last thing is, I think, focus on your why. Why do you want to be successful in multifamily? And is multifamily even right for you? And if you answer yes, I'm here to help. I hope this podcast helps. Hope the blog helps. There's a lot of resources out there. So yeah, that's that. And one last thing I wanted to do before we go is get to the Fortune 5, the 5 questions at the end that I ask every guest, but today it's just me. So I'll give you guys my answers. What is the biggest thing that has contributed to my success so far? I think it's mastermind groups for sure. So getting accountability to grow with the force and the ideas of others. I think that's huge. Like that's made a significant impact in like every part of my business and investing. And I think on top of that, you have to have personal accountability and mental toughness. So the mentally weak person, right, will just blame the market that there are no good deals, while the mentally tough person will go out and market and network and find good deals. So I think that's a big distinction to make, and you have to have mental toughness. And for me, that's been one of the biggest things, is just pushing forward. Like sometimes it sucks, but the ultimate goal is, financial freedom and being able to do really what I'm passionate about later on and go experience the world. So yeah, I think mental toughness is huge for that. What has been your biggest mistake that's turned into a learning lesson? So I don't know, maybe that Huntsville deal that I didn't increase on. So we'll have to see about that one. But I think my real biggest mistake so far was either not knowing the market well enough. Like I tried doing a flip, but I didn't know my comps well enough. And that was a failed flip. I didn't lose a whole bunch of money, but didn't make any money either. Or not knowing the city permit codes well enough. So I lost like 6 weeks on a burn B rehab project. So that was a month and a half. This thing could have been rented, and this was during high season, and that house would have brought in like $5,000 to $7,000 over, per month of rental income. So definitely cost myself there. And yeah, that was a big pain in the butt. What is your favorite real estate resource that you would recommend to someone starting out? For me, I think it'd be Brandon Turner's book on rental property investing. So that was one of the early books I read. There's a lot in there, talked about how to analyze a deal. And after that, I think he said in there, just like analyze 100 deals before you make an offer. And I just went out and analyzed like 200 or 300 before ever really looking deeper into it. It's like, I got to figure out how to do this, and just a ton of good information in there. So I think that book, and then just Bigger Pockets in general, is a good resource. What I like to do out of real estate. So I really enjoy duck hunting. My lab Bush just retrieved his first duck. So he's officially a duck dog. That was an awesome thing to see. And so I spent a lot of time training him for that purpose. So that was pretty rewarding. And if it flies, it dies. And also love snowboarding, spending time in Colorado. I didn't do enough of it, but once I got into it, just really fell in love. So love snowboarding down the mountains. And where can people find out or connect with me? So I guess if you're listening to this, you know where to find me. It's multifamilyjourney.com or Instagram at Blake J. Dailey. So yeah, that's the wrap up of the Fortune 5. So, all right, everybody, that's the end. This was a shorter episode today. It was just me on here today. Hopefully the solo show was valuable and something good came out of it for you. If you haven't yet, you can go right now and leave a rating and review on the app. Do it before you leave the app. Leave a rating and review. And if you do, I'll give you a big COVID hug. So yeah, that's the show. We're out of here.
Hey, thanks for listening. If you like the show, if you found value in it, please go to iTunes and leave a rating and review. And if you want to check out more on your multifamily journey, go to multifamilyjourney.com where you can get free resources to start your journey and figure out your path. That's multifamilyjourney.com. But more importantly, go take action today towards your financial future. See you next time.